Morning, this is Rick Ackerman. It's Monday, Labor Day, and I just want to get a little bit ahead of the market for the week. Couple things that deserve our attention. Those of you who have followed these reports, either on Facebook or on YouTube, know that my worldview has been pretty bearish, but I'm always looking at the charts first. And as much as I want to say the market is ready to give way, implode, I'm looking at a chart here of DIA that suggests that higher prices impend. We've had a pretty buoyant market lately, mainly because there is this expectation that something is going to come from the trade talks between the US and China. And I wouldn't hold out too much hope that we're going to get an agreement of substance. I think it'll be more of a face-saving pact, and I guess the crucial area will be whether China still can require US companies to give up their technology just to do business in China. So that's where to look in any agreement that's concluded to determine whether it's for real. But I doubt that we're going to get much, but that hasn't stopped the short squeeze pressure. There has been, just in anticipation of some sort of deal, any sort of deal, a bullish, short covering. So we've had a pretty good short covering rally, and I'm looking at some other things that are much bigger factors that will be influencing the market. Number one, U.S. housing and autos have topped, and we've also we're seeing a real recession develop in Europe and a serious slowdown in China. So it's very difficult to imagine the U.S. not sinking into recession with its major trading partners also moving into recession. So despite all that, the pattern that you see here in DIA, which is a vehicle for trading the Dow Industrials, has tripped what we call a mechanical buy signal. I'm not going to go into the proprietary details, but the Dow became a buy back on the 5th of August when it pulled back to that green line after having gotten as high as, the midpoint between the red line and the pink line. The target here is 287.54. That equates to the Dow being at 28,754. That is a little more than 2,000 points above where the Dow is currently trading. So we've had a mechanical signal, but it's obviously taking the Dow away a while to take off. Also, one thing that's going to be crucial over the next few days, there's a counter trend signal, something we would like to short in the rally that we had last week to just above some of the highs that have occurred in the month of August. And typically when you get that rally, it stops out the shorts, and as soon as their buying power has been expended, then this thing could come down pretty hard. So if that's going to happen at all, you'll see it happen within the next 2 to 3 days, Tuesday, Wednesday, Thursday, perhaps. But otherwise, if we break out above that red line, as bearish as I am on the big picture, on the real economy, the real world, which we know the stock market does not pay much attention to, I would have to say that the 287.54 target is in play. But otherwise, we'll be looking to lay in a few puts, and of course we can do that just with some out of the money calendar spreads is a good way to play it. If you're interested in getting aboard, coming into these strategies in real time, let me suggest that you come to Rick's Picks. Just go to rickackerman.com. Let me see if I can bring in the page so you can see what it looks like here. But if you go to rickackerman.com, that is the home page of Rick's Picks. At the top of the page, just leave your name and email address and click Start My Free Subscription. You'll have a no obligation 2-week trial. You'll be able to access all areas of Rick's picks, including the trading touts, many of which are actionable, but you'll also be able to gain entree to the trading room. This is a round, very good discussion, a lot of real-time information here, a place where great traders from around the world gather and share their trading ideas in timely fashion. There's also a more informal discussion in something called the coffee house, and that's anything goes. Right now we seem to have a pretty uh, uh, interesting discussion involving some gold stocks in particular. So that's about it. I will be weighing in perhaps later in the week. I'm actually up in New Jersey right now, visiting friends at the Jersey Shore for kind of end of summer vacation. I'm not too eager to get down to Florida for reasons that most of that you'd be aware of. This hurricane seems to have stalled, and so am I. So I'm going to stay up in New Jersey for a bit until the weather looks better. So with that, I'm going to wish you a very pleasant good day, and I will talk to you again perhaps later this week.